So my name is Ryan Slack, CEO of Greenpearls.com, and I welcome all of you here tonight. Thank you very much for coming. Basically, we're doing a Building Owners Cash Flow seminar. The overall idea of the panel, or a series of speakers rather, is to provide ways of either improving revenue or decreasing costs on a building. Ideally, a mixed-use or multifamily building in the New York City area. That's sort of the target that I've given the speakers to address. They'll be speaking consecutively, 10 minutes each, with 5 minutes of Q&A. So if you have questions for a speaker, you can reserve it to the 5-minute period after they finish their particular presentation. They've all agreed to stay afterward, so between 8 and 9 we'll have a period of networking and cocktails, in which you can speak with them as well. You may have noticed handouts that I've distributed throughout the room, or rather Judy, the lovely Judy, has distributed around the room. I'm going to email that to everyone who's at least given us an email address, either in the fishbowl up front or by registering online. So without further ado, I'm going to just give you a little bit more. Basically, the lineup tonight is Jerry Ashton of CSSI, who's going to talk about cost segregation. Paul Tyson of Pulver Media to discuss wall space and billboards. Unfortunately, Ron Rice had to cancel. I apologize for that. He's basically was going to speak on cell towers and wireless leases. I will get you his contact information, so if any of you have questions, you can contact him directly, as well as visit the website. Dinah Pangestu is from Solar One. She's going to be speaking on various sustainability incentives through government programs. Reed Scott will follow that up with a similar presentation, but on slightly different topic, which is energy efficiency, and he's with Energy Management Systems, which I've shown you here at EMS. Finally, Rob Ashmore with AN Solar will talk about rooftop solar. Before I hand the floor over to you, Jerry, I just want to talk a little bit about Greenpearls.com. There are some misconceptions about what we are and what we do. We are an events and networking company. We do throw great events like this all the time. We're up to about one event per week. But we're also a marketplace for deals, events, and job listings. If you haven't had a chance, go to Greenpearls.com, take a look. It's ideally focused on business-to-business interactions, referrals. If you want to find somebody else in the industry, this is a place to do it. It was built off of the original database from Property Shark, which I helped found. So there are 500,000 people on our mailing list, of which tens of thousands are using the site, so you might want to check that out. Upcoming events on May 19th, that's next Tuesday. We have a double header, networking skills workshop limited to 40 people. You're all out here tonight, so I assume you don't need that. But if you feel like you do, it's an excellent, basically workshop that will be moderated by two communications experts. That will be followed by rooftop networking at the same venue. That's Bar 13, and you can find that on the website. The following week, we're going to have a special event. It's basically commercial real estate deal making. It's an extraordinary event where everybody gathers around while eating dinner, and Peter West, he's a CCIM Institute member, as well as Keller Williams commercial broker, basically goes through the room and talks about finds out who has cash and what they're looking for, and make sure that everyone is covered and everyone has said their piece. And then he follows it up by doing the same thing with property. I've seen this with my very own eyes in New Jersey last month, and it's extraordinary. So we've decided to bring it to Manhattan, and that's May 28th. It'll be at Legends, which is across the street from the Empire State Building. And again, you can check that out on the website. We'll have other upcoming events. We have Nassau County, May 27th. We have real estate marketing series coming up, as well as a distressed property seminar in June. We'll be entering the Bronx in June as well. So if you could check that out, you can visit the website, Greenpearls.com. Lastly, we do have a survey feedback form, which you either picked up on the way in or you'll find on the way out. Just a little feedback for us to understand how we can do what we're doing better. So without further ado, we're going to switch over to Jerry. And this is where you get to look at all the other presentations. Oh, awesome. So that's it.
So I will be peering over there since the technology doesn't allow me to.
I did want to make one comment, I'm sorry. I apologize that we only have the one projection screen. I did bring a projection screen massive, but forgot the stand. So not that everything's perfect, but if you can't see the screen, we will be distributing the presentations. Thank you.
And I'm more than happy to trade cards with anybody and see that you get the PowerPoint as well. I'm Jerry Ashton. I'm with an organization called Cost Segregation Services, Inc., out of Baton Rouge, Louisiana. It's a national firm an engineering firm that does only one thing. It's called cost segregation. And now you hit that. Thank you. If cost segregation is foreign to you, chances are you're paying too much in taxes if you're a property owner. There are tens of thousands of you that are in the same boat, as a matter of fact, overpaying. So unaware of this tax ruling, and many people are, and it's legal, my job here is to introduce you to it, and hopefully, whether it be through my company or one that you might find, you might want to do this. Cost segregation studies. What is cost segregation first? Cost segregation is the IRS sanctioned way for a commercial property owner to accelerate depreciation on their property. What does that mean? Well, for an apartment building, it's 27.5 years, and your accountant will tell you that's how long it takes to depreciate the building. If it's a commercial building, it's 39 years, and you'll be told how long that'll take. But with cost segregation, you break the building into parts, and the parts can be accelerated in depreciation a lot faster than that. So, the big four accounting firms, obviously they jumped on the bandwagon when this came into existence. They took care of all the large commercial property owners. Nobody really heard about it except at that very rarefied part of society. 5 years ago, this company came into existence to serve only one market, and that is the middle market and smaller building owners, although we've done some major properties. Yes, it's all based on legal decisions. We can thank the Hospital Corporation of America for owing the IRS so much money. They owed them $800 million, and they thought they would offset this by accelerating the depreciation on the buildings. They were told no. And the Hospital Corporation of America took the IRS to court and said, why can't we do this? So, at the tax court, they posed a question to the IRS. They said, why is it that commercial property owners in America do not accelerate depreciation when they're allowed to do so? And the answer was, well, we know they should, but we're not about to tell them. And with that flippant remark, the gavel came down, and a new industry was built. Stipulations, however, not just anybody can do these studies. In other words, if the IRS is going to allow you to accelerate depreciation, they want to be very clear about what it is you're doing. You're not going to go like this. They're going to ask for a study to be made. And an engineering study is one that is needed. Rules and regulations always. Here are the guidelines. The building that you own has got to be purchased from 1986 or newer. And then there's a whole bunch of important gobbledygook, which we won't go into, but it says these are the precedents that allow you to do this. Cost segregation, accumulated depreciation, can be applied to your tax year today, and I'm going to show you how that's done. First of all, who are the candidates? If you purchased a property anytime since 1986, if you've constructed a property, or if you've renovated or remodeled a property, you are entitled to accelerate your depreciation. This is a rather wild example here. One client of ours had 60-some-odd properties, quite a few $1 million. Some were apartment buildings, some were warehouses, some were self-storage, some were restaurants. We did a study on each and every one of them, combined them into one report, which we then gave to the CPA. This is where we're very good friends of CPAs, because with our studies and their expertise, Form 3115 is provided to the IRS, and you get the money. We'll tell you what that's all about. So it's really about parceling things into their proper place. There's real property and there's personal property. Okay? Accelerate past that. Oh, the beauty behind this is that, let us say that, want to go to the next one? Thank you. Let's say that you have $200,000 in depreciation expense this year, and you owe $100,000 in taxes. Well, guess what? You now have lost $100,000. So what do you do about that? Number one, you can carry it back 5 years, thanks to the latest challenges we've been faced with. Rather than going back in 2 years to get that depreciation, you can actually go back 5 years. What does this mean? That means if you paid taxes in the last 5 years, and even if you're broke today, you file for your taxes that you paid, and you get that money. Or let's say that you use it all up.